Are we going back to the 1970s with gas lines? Are bell bottoms coming back in? Are we going to see $5 a gallon gasoline? Is that what's happening here? Hello, friends. Welcome back. Now, in last week's video, we discussed the conflict in Iran and the impact on oil prices and the market. Well, things escalated quickly over the weekend, and I am recording this Monday evening, March 9th. The big headline this morning was that oil prices had hit $100 a barrel, a big number. The stock market was down about 1.5%. Everything seemed to be getting a little bit crazy. But just like the weather here in Colorado, if you don't like it, stick around. It's probably going to change. By the end of the day, oil retreated back down to around $86, and the S&P 500 finished the day up positive 1%, a total reversal. Amazing. So, with retail gas prices pushing about $3.50 a gallon, what does that mean for you? Do we need to worry about the 1970s style fuel shortages and a return to gas lines? Short answer, no. Firstly, the biggest difference is that the US is now a net exporter of oil. That is huge. So even if prices climb globally, we will not run out of gas since we drill at home. We have more than enough domestic production. So what if prices go up to, say, $5 a gallon? First, we don't think that's going to happen. It absolutely could, but we don't think that's coming. But here's the impact to our economy. At $3.50 a gallon, the average household spends about $200 a month on gasoline. At $5 a gallon, the monthly bill would be about $300 a month, so a $100 difference. Yes, $100 is a lot of money, but not enough to significantly slow our growth, especially with refunds, tax refund checks going out. Unemployment is down to about 4.4%, ticked up from 4.3. The point is it could be a little uncomfortable, like you can't eat out a few times this month, but it can be absorbed, absolutely. Now, on a side note, there are some marginally positive things to higher oil. And just as a reminder, there's always something good out there. For example, we have American energy producers whose earnings could go up as a result. We noticed a lot of oil companies today where the stock price was increasing, and you might benefit from that in your portfolio. This is why we diversify. They're obviously incentivized to expand when production slows around the world. So there can be some positive downstream effects from these events. So with regards to the stock market, we are still within 5% of all-time highs, believe it or not. Remember, we expect 3 or 4 times a year a 5% pullback. And every single year, we expect a correction, meaning at least 10%. The average is about a 14% drawdown, peak to trough, since 1980. So we have been talking about the market being expensive after 3 great years, wonderful returns. And if the market moves sideways, I'm not mad. We will have a correction at some point. Don't be surprised. We will stay focused on the long term. We will stay the course, absolutely. In summary, our thoughts for 2026 really have not changed much. Our economist has not altered GDP projections. Modest growth similar to last year, modest gains for stocks, maybe a little less than last year. We'll see. Time will tell. Hope that helps. We'll see you next time. Have a great night.